working.
Gareth seems to be flickering. And is that Hernan? Hernan?
Yes, my name is Hernan. How are you?
Very well.
Thank you. Ayolin, I'm not sure. I cannot see who is.
No, I'm Marianne.
I'm Marianne. Sorry. Nice to meet you, Marianne. Thank you for having me here.
Nice to meet you too. Okay, well, I don't know, maybe some more people will be joining later because I saw a few names further 20 minutes ago, I think, waiting to join the session. We are going to be on the theme of banking, and partly because I used to work in a bank, but an investment bank, so very different from your high street bank. And also a couple of nights ago, I saw a very interesting movie. Normally, I avoid movies about banking because I don't like to be reminded too much of that evil world as I see it. But this was a really good movie. So I thought today we would look at the great crash of 1929. Because it's a fairly, I think, still a fairly topical subject in that we have had a few close calls in recent years. So it might help you understand a little bit more about how dangerous investment banking can be. So we have April with us, Dope, Gaurav, and now my eyes. I need to put my glasses. Is it Hernan or Herman?
Actually, I am from Argentina. It's a Spanish name, and I can understand that it could be hard for native English speakers to pronounce it, but it's Hernan. But however you can pronounce Hernan, yes, the H is
Hernan.
But,
okay, I will try my best because
but
I try
don't
to
worry.
learn Spanish.
All right, that's good. But if you just want, as you can pronounce it, I will understand that you are talking to me. So don't worry.
Okay.
And thank you.
Thank you. Now I'm not sure how this works. Trying to put pictures. No, yes. Okay. So it doesn't show exactly, but this was one of the pictures that I saw. So millions lost as stocks crash. Do you all understand what is meant by stocks in this context? We talk about the very famous in London, the stock market. So the stock exchange, the stock market. So what are stocks then? April, what are stocks?
Is it the kind of transaction between buyers and sellers? Like
well, yes, it is in a way because that is what they are doing. But stocks really refer to shares. So the share usually in a company, but there are many very clever instruments now, and we call them sometimes financial instruments. So shares are one of a group of financial instruments, things that you can do with your money to try to make your money grow. So shares, though, perhaps are the oldest. When you have a company, you start off, it's small, and one person can own that company quite easily. But as it gets bigger, you want more money. You need money for investment. So you then will sell a share of the profit of your company. And so that piece of paper, share in your company, will entitle the owner to have a percentage of the share of the profits, which are usually called dividends. Now, of course, if somebody who buys a share in a company gets tired of it and they want to sell it, there's a market. People want to buy shares in companies. The better the company, the more profitable it is, higher the price. And so we have a whole market for these particular products. Now, the other picture that I put It's a picture from 1929 in New York. And it's not perhaps that easy to see, but you can see that there's a huge crowd of people in the streets. And I think this picture is actually people outside the street when the stock exchange was starting its crash. Many businessmen actually threw themselves out of the window and committed suicide because they had lost absolutely everything. So I think Dope said it all right at the very beginning. Let's see what he said. Bankers' greed is undefeatable. Yeah, it's very true. So, Dope, perhaps you would like to start us off. I'll just copy the paragraphs over. Dope, would you like to start reading?
Yes. As the Wall Street crash of 1929, also known as the Black Tuesday, October 29, the Great Crash on the stock market crash of 1929 began on October 24, 1929, Black Thursday, and was the most devastating stock market crash in history of the United States, when taking into consideration the full extent and duration of its after effects. The crash, which followed the London Stock Exchange crash of September, signaled the beginning of the 10 years Great Depression that affected all Western industrialized countries. The roaring...
Yeah, carry on reading.
The roaring 20s, the decades that followed World War I and led to the crash, was time of wealth and access, building on post-war optimism. Rural Americans migrated to the cities in vast numbers throughout the decade, with the hopes of finding a more prosperous life in the ever-growing expansion of American industrial sector. While the American cities prospered, the overpopulation of agricultural produce created a widespread financial despair among American farmers throughout the decades. This would later be blamed as one of the key factors that led to the 1929 stock market crash.
Very good. Okay, were there any words there that you were not sure what they meant?
Yeah, devastation.
Okay, devastating, the most devastating. Anyone know what devastating means? If something is devastating. April, do you know?
Suffering, killing, bad, terrible.
Yes, all of those things. Something which is very destructive, something which destroys. So we talk about a devastating war. We talk about a devastating storm that maybe has damaged a lot of property. Maybe people have died. So devastating, destructive, something that does a lot of bad. Okay. So it was the most destructive.
She had cancer.
Yeah. So, and the verb to devastate, yes, to destroy. So it was the most destructive stock market crash in the history of the United States. So 2008, there was a crash, but it wasn't nearly as bad as this. It led to an economic depression for a few years, but not like the Great Depression that really was a huge problem for over 10 years. And not only did it affect the United States, but also Europe. So when we look at the 1930s in Europe and the United States, this was a period that was very poor, where people were struggling to survive. And that followed from this.
Also affected very shit.
And yeah, I think in in Russia too, there was an economic downturn. I don't know though how much that was dependent on the American crash, because Russia was very much independent of it wasn't really so dependent on the United States and the rest of the world in those days.
Yes. Our government usually buys bonds, American bonds, and if position is getting worse, and our position also.
Right. So even Russia in the 1930s was affected. Now, further down, we read that actually, and Shiny isn't here, but Japan was about the only country that wasn't affected. And again, that was because they were very isolationist. They were very much on their own in those days. Okay, so that's our introduction to the crash. So who would like to volunteer to read the next paragraph? Or perhaps I'll pick on people. That might be better. Perhaps Hernan, would you like to read the next paragraph, please?
Of course, thank you. Starting here, despite the dangers. All right, thank you. Despite the dangers of speculation, many believe that the stock market would continue to rise forever. On March 25, 1929, after the Federal Reserve warned of excessive speculation, a mini crash occurred as investors started to sell stocks at a rapid pace, exposing the market's shaky foundation. 2 days later, banker Charles E. Mitchell announced his company, the National City Bank, would provide $25 million in credit to stop the market slide. Mitchell's move brought a temporary halt to the financial crisis, and coal money declined from 20 to 8%. However, the American economy showed ominous signs of trouble. Steel production declined, construction was sluggish, automobile sales went down, and customers were building up high debts because of easy credit. Despite all this economic trouble, signs and the market breaks in March and May 1929. Stock resumed their advance in June, and the gains continued almost unabated until early September 1929. The Dow Jones average gained more than 20% between June and September. Thank you.
Very good. Thank you. So, speculation, what does that mean to you, Hanan? What do you understand by speculation?
Speculation, well, it could be a long definition, but well, in this context of the shares and things like that, well, I think that it's related to get profit. You invest money, and it's like gambling when you're talking about shares. So it's you try to speculate and to get interest and to get more money than you invested, and they can guarantee you that it could be safe or not, but it's gambling. I mean, I don't think that it's. I mean, you could have some like inner information or whatever, but if not, I mean, it's like putting a chip on a casino. It's similar to that, I think. But that's my opinion. Maybe I'm too conservative.
No, exactly that. And as Dope says, well, it's purchasing and selling stocks, but speculation is more than that. It's not just, it's exactly what Herman said. It's with the hope of making a profit out of it, which actually can be quite risky. So you've got no guarantee, actually, that you're going to make money out of it. Now, credit, then. You understand what is meant by credit in this context, because many of these words obviously have different meanings when you're not talking about finance. So let's see, where did we... So the Mitchell announced his company, so he owned a bank, would provide 25 million in credit to stop the market slide. What are we using the word credit to mean here? Think of your credit card.
It means how many people have borrowed money.
Yes, it's like a loan, yeah, where you pay back later. And okay, so I don't know if any of you are very familiar with what call money might mean. Might depend on I think unless you've probably worked in a bank, this one's a bit more technical. Does anyone know what call money means? It's a very specific term. So it's you either okay, I'll tell you this one because it is very specific to banking. So call money is money that's actually borrowed by the bank or another financial institution. And this money, though, might have to be paid back any time. So it's a loan, but it's a very risky loan because if the person who has, or the company that has lent that money wants it back, they can ask for it at very short notice. Okay, so I'm trying to find the context where we mentioned call money. Okay, call money declined from 20 to 8%. So this meant that the banks were not very confident. They were not giving. They didn't really want to be using this because the market was in such a crisis. They didn't want to risk so much. So the amount of call money actually declined from 20 to 8%. So this also meant that there'll be less cash, less money in the economy. And then we've also got the American economy showing ominous signs of trouble. Hanan, do you know what ominous means, if something is ominous?
I can speculate in this context, but I guess that is something huge, something that was happening everywhere. Or
okay. No, ominous. Ominous doesn't really have anything to do with size.
Wait, if I can maybe read the sentence again, and I'm trying to find. Could it be notorious signs of trouble, like ominous in this?
Yes,
like
signs of trouble. Okay, signs of trouble. That's a good explanation for it. It's when you have this feeling that something bad is going to happen. Okay, when you see the black clouds in the sky, you could say that looks ominous. It looks like there's going to be a storm or it's going to rain. Okay, so it's the bad signs that something is going to happen. And unabated, Hernan, do you know what unabated means? I think that was also just after, let's see, okay, so stocks resumed their advance in June and the gains continued almost unabated until early September.
Again, I must speculate, but it could be gains continuing almost unabated. It's like saying unchallenged or without, no.
Yes.
Okay.
Good. So without
it was a shot in the dark. Yeah.
Very good. And this is where actually context can sometimes give a clue about the meaning of a word. So when you come across words that you don't understand, it's always a good idea to try and guess, because you're likely that you might not be very far off. Okay, let's see. Okay, we have Edward. Edward, I'm Marianne. I don't think we've met before on the forum, but would you like to read the next paragraph, please? Edward, are you there?
Hello.
Hello. So would you like to read the paragraph that starts?
Okay.
Yeah.
Okay, thank you. The market had been on a 9-year run that saw the Dow Jones Industrial Average increase in value tenfold, peaking at 381.17 on September 3, 1929. Shortly before the crash, economist Irving Fisher famously proclaimed, "Stock prices have reached what looks like a permanently high plateau." The optimism and financial gains of the great bull market were shaken after a well-publicized early September prediction from financial expert Roger Babson that a crash was coming. The initial September decline was thus called the Babson break in the press. This was the start of the Great Crash, although until the severe phase of the crash in October, many investors regarded the September Babson break as a healthy correction and buying opportunity. The end.
Okay, very good. Thank you. Now, again, there are a few financial terms in there. Right at the very beginning, Edward, the market had been on a 9-year run. So we talk about a run on the market or a market run. Do you understand what that means? If there's a run on the market, and it doesn't need to just apply to stocks and shares. It could apply to a market in anything, really, but we're talking about a run on the market.
Fortunately, I haven't familiar with this. I haven't familiar with the share market or anything.
As I said, it can apply to any market in anything. April, do you understand what it means by a run on the market? We could have a run on the market of potatoes.
Does it mean that it is going on for 9 years?
Well, that's how long it was actually going on, but a run on the market doesn't have to be particularly long, or it might be quite short. Okay, I'll give you another example.
Period.
I'll give you a clue, April. In Nepal, when they hear that India is going to close the border, they do that quite often with Nepal, then it means that petrol will be in short supply. So there's a run on the market. Do you understand what I mean now? Okay, it's when people think there's going to be a shortage. So that means everybody goes and buys, they go crazy. They try to have a stock of whatever it is because they're afraid that there will be a short supply. So that means that for about 9 years, everyone was buying because they thought that they wouldn't have a big supply of whatever it was that they were buying. Okay, so of course that pushes the price up. It makes the price high, but artificially high. Yeah, it's pushed the price up to a level which is not really realistic, because if people were being sensible and not worrying that there was going to be a short supply, then you wouldn't have such a high price and a run on the market. Okay, Edward, I don't expect that you would understand necessarily what a bull market is. And we're not talking about bulls, we're not talking about animals. But can you guess roughly what you think it might mean? Or this is very much a technical banking, investment banking term. Any ideas what a bull market is? Anyone? Does anyone know what a bull market means?
It means a greater profit will come in the market.
Yes, good. You're optimistic. You actually, everybody thinks that the prices are going to go up. Yeah. The opposite is a bear market. Now, I have no idea why these two animals should represent optimism and pessimism. But when people think that the prices will fall and continue falling, so trading stocks and shares, you should hear it sometimes when the dealers are all shouting because they are trying to buy, and when the market is moving fast, they have to sell fast or they want to buy fast. Yeah. So when they are optimistic, they're going to be buying because they think the prices will continue to rise, which means when they want to sell a bit later, they will make a profit. If it's a bear market and they think the prices will continue to fall, they want to sell as fast as possible so that they don't make such a big loss. And of course, this makes the prices fall even faster. Okay, and that's when you have the crash. Okay, maybe Nidhi, would you like to read the next paragraph? Hold on, copy it. Okay, Nidhi, are you there? Or maybe Nidhi's gone to make herself a cup of tea. Ah, you're here, good. Would you like to read on September 20?
Yeah. On September 20, the London Stock Exchange crashed when top British investor Clarence Hatry and many of his associates were jailed for fraud and forgery. The London crash greatly weakened the optimism of American investment in markets overseas. In the days leading up to the crash, the market was severely unstable. Periods of selling and high volumes were interspersed with brief periods of rising prices and recovery. Selling intensified in mid-October. October 24, Black Thursday, the market lost 11% of its value at the opening bell on very heavy trading. The huge volume meant that the report of prices on the ticker tape in brokerage office around the nation was hours late. So investors had no idea what most stocks were actually trading for at that moment. Increasing panic. Several leading Wall Street bankers met to find a solution to the panic and chaos on the trading floor. The meeting included Thomas V. Lamont, acting head of Morgan Bank, Albert Wiggin, head of the Chase National Bank, Charles E. Michel, president of the National City Bank of New York. They chose Richard Whitney, vice president of the exchange, to act on their behalf.
Lovely, thank you, Nidhi. Interspersed, what does that mean? Do you know? So right at the top, I think it was the prices and the trading.
Intermingled.
Sort of, yes. So yeah, mixed, sort of mixed. So it was like prices were going up and down, yeah, and the trading was very erratic. It was all over the place. So scattered, interspersed, there were times where it was actually recovering, yeah.
Okay.
And then the other term, which is again very to do with banking, ticker tape. What do you understand by ticker tape? And I'm not sure I've ever
where
seen
prices display.
Sorry?
Where price display?
Yes, it's like a paper strip where the messages are recorded. So it's the old way that they were communicating, because there weren't any faxes, emails in those days. So it was like a telegraph, like a telex. Sorry about the music in the background. It's going to go off in a second. So a ticker tape. And this would show the prices, and it was just going very, very fast. Yeah. Okay, are there any other words there that you don't understand?
Yeah, one sec.
Okay. Okay, who have we? Okay, April, you haven't read for us yet.
Yes,
Would you like to read the next paragraph, please?
Yes, gladly. With the banker's financial resources behind him, Whitney placed a bid to purchase a large block of shares in U.S. Steel at a price well above the current market. As traders watched, Whitney then placed similar bids on other blue-chip stocks. This tactic was similar to one that ended the panic of 1907. It succeeded in halting the slide. The Dow Jones Industrial Average recovered, closing with it down only 6.38 points for the day. The rally continued on Friday, October the 25th, and the half-day session on Saturday the 26th. But unlike 1907, the respite was only temporary. Over the weekend, the events were covered by the newspapers across the United States. On October the 28th, Black Monday, more investors facing margin calls decided to get out of the market, and the slide continued with a record loss in the Dow for the day of 38.33 points, or 13%. The next day, Black Tuesday, October the 29th, 1929, about 16 million shares traded as the panic selling reached its peak. Some stocks actually had no buyers at any price that day, air pockets. The Dow lost an additional 30 points, or 12%. The volume of stocks traded on October the 29th, 1929 was a record that was not broken for nearly 40 years. After or before?
Wow. Well, I'm surprised that it's been broken since then, because if they say 40 years, that means what, 1969 or something? I wasn't aware that there was such a big crisis then. But anyway, blue chip stocks, what does that mean, April? If something is blue chip. Do you have any idea? Can you guess? Can you guess from what you think it might mean? talking about
Steel,
blue
maybe? No? Steel?
Okay, well, steel might have been one of the blue chip companies, but we're talking about top companies. So blue chip stocks, for instance, BP Oil in Britain, that this is a stock, to have stocks in BP, which once upon a time I did have some, I sold them all, but is one of the very popular companies that pension funds will invest in, because it seemed to be one of the most is a very profitable company. It's not risky. Nobody thinks that BP oil is going to suddenly disappear. So it's seen to be a blue chip stock. Now, we're talking about the Dow Jones Index. Do you all know what Dow Jones Index means? April, do you, I think you have maybe an idea.
Yeah, Dow Jones is that stock market company. And Dow Jones.
Okay, it's actually the index I'm interested in. And the index is what? The Dow Jones, we talk about the Dow Jones Index. I think I've got this further on. When we talk about we're talking about an index now.
It says the difference between selling and buying.
It's more to do with the prices. Yeah, it's a list of prices. So for instance, in the American newspapers, they will show the prices of shares. In the Financial Times, you get, I don't know, in the central pages, you have the FTSE, which is the London equivalent. So perhaps a bit later, actually, I think that's explained. So when we talk about the Dow, that is the shortened form for the Dow Jones Index. So when it says the loss in the Dow for the day of 38.33 points or 13%. Okay. So, and we talk about, there's an actual figure. Now, I'm not familiar with the Dow Jones Index, and I'm no longer at all familiar with the FTSE Index, but that number is an indicator of the prices in a sort of like total. So when it falls or rises, you have some idea of how the stock market is faring. Okay. So
Marianne, 30 US industrial companies, but I can't imagine that all that companies has the same at that moment a rising index or the
yes,
maybe
yes.
Yeah.
Usually when the prices are going up, usually that applies to many companies. There might be some which it doesn't apply to because internally the company has a problem. But in the different sectors, so we also would look at the actual what sort of company is it. So for instance, you have the food sector, or you have the iron and steel sector. Certain sectors might be doing very well. So all the companies usually will be following the same trend, okay? But for instance, steel might be doing well, maybe agriculture not so well, yeah? But in general, if the economy is doing well, there will be an upward movement, either very large or smaller. And similarly, when there's economic depression, then the general trend will be downward. Okay. Okay, and then there was one, oh yeah, there were a couple. Okay, margin trading. Oh, wait a minute. Yes. So we have a slide. We have a rally. What does rally mean? What does slide mean, April? And we're talking about in this context. So something slides. What do you think that means? If there's a slide in prices.
It succeeded in holding the slide, and it
think of
I
a
don't
kid
know.
on a slide. Think of a little kid on a slide in the park. What do they do when they go down?
Go down then.
Yes, they
Going
go
down.
down. So we talk about a slide being a fall, okay, or a drop. Okay. Now, if something rallies, rally is a word that can be used in to mean different things. But in this context, what does it mean if something rallies? If you Google rally, you'll probably get the Monte Carlo car rally or something like that. But it's not, that's it. Rally also has a different meaning. It's not really go up and down, Dope. Not quite. Okay, if something rallies, it means that it makes a sort of recovery. Yeah, it gets better, it improves. And then there's also respite, which has a similar sort of meaning, but it's a bit more temporary. So it's a short period of recovery. Okay. Now we get on to slightly more technical terms here. Okay. Because margin calls. Now, I don't know if any of you have seen the movie, but a margin call is very technical. So maybe I'll get someone to read the definition of this because it's quite long. Let's see. Hanan, can we go back to you? Would you like to read what I have put here as the definition of a margin call?
Yes, of course. Margin call. The initial margin is the initial amount you can borrow, and the maintenance margin is the amount you need to maintain after you trade. In volatile markets, prices can fall very quickly. If the equity value of securities less what you owe the brokerage in your account falls below the maintenance margin, the brokerage firm will issue a margin call. A margin call forces the investor to either liquidate her position in the stock or add more cash to the account.
Okay, so we're getting into serious investment banking here. So in the paragraph, April, we talked about margin call. So I'm trying to see where it is. Okay, so over the weekend, the events were covered by the newspapers across the United States. On October 28, Black Monday, more investors facing margin calls decided to get out of the market. And the slide continued with a record loss. So these margin calls can be made at any time that the company that has provided the money to another financial institution wants their money back. And so that means there has to be confidence in the market that the prices are not going to fall because nobody wants to make a loss. So it's a bit like dominoes, where when you tap one, they fall and they lead all the others to fall. So everyone is connected and everyone's looking to see what the other companies are doing. Now, there are some very interesting movies. If you're interested in learning more about finance and margins, there is quite a good explanation on Wiki. But the movie, Margin Call, as I said, I don't normally like watching movies. There've been some awful movies about the financial business that remind me of how awful it can be. But this one I thought was extremely well acted. You have Kevin Spacey, who is the head of sales. He doesn't really want to sell, but he's forced to by the owner of the bank or the financial brokerage firm, Jeremy Irons, who is very ruthless. The film actually starts showing a lot of their traders being made redundant. Do you understand what I mean by to be made redundant? If you're made redundant, what does that mean?
Jobless?
Have any of you ever been made redundant?
Jobless, Marian?
Yes.
Losing your job, yeah?
Yes, you're losing your job, but the company actually pays you off. They don't want you anymore, so that's their fault. It's not you, and you haven't done anything wrong. You've done your job properly, but perhaps they're cutting back. Perhaps they don't feel that your job is needed anymore. Often it's because, and when a company takes over another company, often they make a lot of people redundant. Yeah. So the film starts off showing a number of the staff being made redundant. And one of them is actually crazy that they should make him redundant, because he was the head of risk management in this company. And he had worked out that the company was in a very, very risky position because they had used more of their maintenance margin than they should. So if the companies wanted to call back that margin, the company would go under. It didn't have enough money to pay back. But it's actually quite a very, well, I would say quite a good film, in that the drama is there and it really does show how crazy the whole business is. Yeah. But I downloaded it from torrent, watched it a couple of nights ago, and it's certainly a movie that I think is worth watching. Okay, so let's see. We haven't quite got to the actual crash yet, have we? Okay, let's see. Have we lost someone? I'm not sure. Whose turn is it now? Who wants to read this next paragraph? Okay, Dope's gone, that's right. Okay, Nidhi, would you like to read this? Nidhi, are you there? Maybe Nidhi's gone. Okay, Edward, would you like to read this?
Yes, thank you. I can read. On October 29, William C. Durant joined with members of the Rockefeller family and other financial giants to buy large quantities of stocks to demonstrate to the public their confidence in the market. But their efforts failed to stop the large decline in prices due to the massive volume of stocks traded that day. The ticker did not stop running until about 7:45 p.m. that evening. The market had lost over $30 billion in the space of 2 days, which included $14 billion on October 29 alone. After a one-day recovery on October 30, where the Dow regained an additional 28.40 points, or 12%, to close at 250.47, the market continued to fall, arriving at an interim bottom on November 13, 1929, with the Dow closing at 198.60. The market then recovered for several months starting on November 14, with the Dow gaining 18.59 points to close at 217.28 and reaching a secondary closing peak. Example, bear market rally of 294.07 on April 17, 1930. The following year, the Dow embarked on another, much longer, steady slide from 1931 to July 8, 1932, when it closed at 41.22, its lowest level of the 20th century, concluding an 89% loss rate for all of the market stocks. For most of the 1930s, the Dow began slowly regain the ground it lost during the 1929 crash and 3 years following. Beginning on March 15, 1933, with the largest percentage increase in 15.34%, with the Dow Jones closing at 62.10 with an 8.26 point increase. The largest percentage increases of the Dow Jones occurred during the early and mid-30s, mid-1930s. In late 1937, there was a sharp dip in the stock market, but prices held well above the 1932 lows. The market would not return to the peak closing of September 3, 1929 until November 23, 1954, the end.
Very good. And you did really well there because there were a lot of numbers, and numbers are not always very easy. Interim bottom, I had to struggle with because I think this is also a financial term, because when I tried, I would guess at what it means in terms of it's, I think, a short-term, temporary low point, okay? When I Googled it, I found a lot of financial articles that included the term, but I couldn't find anywhere any sort of dictionary definition of it. So I have the feeling that this is something which is used in a financial context to mean something specific, but is not really recognized outside of the financial world, and I couldn't even find any definition of it. So I'm guessing that it means it's a temporary, short-term low point. Yeah. Okay, I talked a little bit earlier about the Dow Jones Index. Now, I didn't actually see, Dope told us it was 30 companies. In Britain, we have the equivalent, and we call it the FTSE. And in fact, if we look at the definition I've just put here, that's exactly how we say it. We don't say the FTSE, we call it the FTSE, and that's how it's pronounced. And we have the FTSE 100 and the FTSE 300. So the FTSE 100 include the top 100 companies in the UK. The FTSE 300 is a little bit more risky because the additional 200 companies are not as blue chip as the FTSE 100. So the FTSE 100, we're talking about the well-established, reliable top companies. The FTSE 300 is including companies that are not quite as well known, they're perhaps not quite as stable or reliable. And so in the same way we have the Dow Jones Index, we have our FTSE Index, and then we have also, and I've forgotten its name, there's an index in Japan, and those three indices, so index, when it's in the plural, is one of those words that changes. Okay, thank you, April. We have a budding financial wizard, April. So we have these three indices, and globally, they are the indices that everyone looks at to see how the world markets are going. Okay. We could go on a bit further with the crash. I think we've covered most of the most important points of it. The actual impact, when you think we've got the Great Depression, which wasn't just in the US, but it was all over the world, really. One of the things, though, that really helped to bring the Depression to an end, could anyone suggest what they think was the key to the end of the Depression? I'm guessing here, but April's probably the only one who perhaps, I don't know. Hannah, would you like to suggest what you think? It wasn't
what I remember by reading. I don't know if the president was Roosevelt, but I'm not sure if it was him, or because I think that Hoover was in the moment of the crash. But they released some economical measures in order to, they saved a lot of banks because they never lose money. The rich people are going to be rich, and they had broad shoulders in order to buy everything when it was crashing, and they held on. So at last they won money. But I remember that they were trying to have several projects in order to establish more work, because for the depression there was the amount of unemployment was terrible. So I think that they were investing money in constructions and to build roads and things like that. I don't know. At least I'm not sure about the market what were the measures, but with the people, one of the things was trying to give them jobs. But
yeah,
sure.
I think that, but I think in particular, and maybe this was a biased history teacher, I don't know, but of course the Second World War. Okay, so from the late 30s onwards, things started to get quite tense in Europe, but at the same time, particularly in the US, armaments, and then of course when you had the actual war itself, particularly for the US, they were producing a lot of armaments. They were sending a lot of the formerly unemployed people who now had jobs as soldiers. And so actually, it really demonstrated how war is actually can be a very effective tool to get rich for some companies. Yeah, it provided jobs. It meant that there were companies that were actually financially doing very well. So the outbreak of the Second World War helped to bring a close to the depression that was affecting most of Europe, most of the world, really. Yeah. Okay, I think that's all we've got time for today. But what I was thinking was that on Friday, we can perhaps look more at the more conventional type of high street banking. I don't know whether in the meantime, perhaps, obviously I've given you the suggestion of the movie. The movie, I found that the English is very easy to understand in that the characters don't speak very fast. And there are quite a few British actors, which of course is always helpful because the accents are not so difficult sometimes if you're more used to British English. But you might find that is a movie that's well worth trying to watch. I mean, obviously I watched it without subtitles, but it shouldn't be difficult to find subtitles if you feel that they would be useful to you. But anyway, I'll leave it for now and see you all maybe on Friday. Bye for now.